In this video, I'm going to talk about the difference between sales and profit. Oftentimes we hear people use these terms almost interchangeably, but they mean two completely different things. So let's take an example. Let's assume that you decide you want to start your own business and you decide to open a bookstore. So you buy a bunch of used books from people or from schools, and you go and you rent out a space and you start selling these used books. So when someone comes to your store and they purchase a book, and let's say they give you $20. So they hand you $20 for a textbook. That $20 is sales revenue. You can call it sales, you can call it revenue. It doesn't really matter. Sales, revenue, put them together. That's what that $20 is. When you ring up the register and you say $20, they hand you $20, that's sales. But this is different from profit, because profit is what you get after you deduct all those expenses that it took to get you that $20. So let's take this $20. Oops, say sales, $20. But to get that $20, we had to subtract out, we're going to have rent, we're going to have wages that we pay to employees, we're going to have utilities like the electric bill. We want lights when people come into our bookstore. All these different things. And let's not forget that we had to buy these books to begin with, and that's going to be something we call cost of goods sold. The cost of the thing that we sold. So let's say it cost us $10. Change up here again. Let's say it was $10 for that book, and then the utilities were this, and the wages were this, and the rent is a little unrealistic, but let's say someone rents you the spot for $1. So, and you could just picture all these numbers being in thousands or something if that's more convenient for you. But when we subtract out all these expenses, all these costs of doing business, expenses, it's going to give us a number. Let's see here, 20, 19, 16, 14, 4. So this is our profit, otherwise known as the bottom line. And now you can see why they call it the bottom line. Sales are not the bottom line. Sales are the top line. All right? This is what we get when someone hands us the money. But then we have to take that $20 and we have to go pay all of this. We have to pay our rent. We have to pay our employees. We have to pay for the electric. And we have to buy the books. So sales are what we actually get handed in terms of the cash, what we sell our items for. This is the sales price. Then we take out all these expenses, and what we're left at the end is profit, if we're lucky. If these expenses are a higher number than sales, if they're more than 20, then what we have is a loss. So we could have a loss, and losses are usually written in parentheses. And this whole thing right here, this whole thing of taking sales, deducting out the expenses, and ending up with profit, this is what's called an income statement. And that's one of the major financial statements that publicly traded companies have to file, is an income statement, because it ends with profit, otherwise known as income. So net income, income, profit, those terms are interchangeable. Start with sales, deduct out the expenses. The bottom line is profit or net income, and this is our income statement. So sales are the top line, and profit is the bottom line, which we reach after deducting all these expenses from sales.